Have you ever wondered how investing works? Or perhaps how it can work for you? It's a fascinating concept, isn't it? The idea that your money can actually work for you, multiplying in value over time. It's like planting a seed and watching it grow into a mighty tree, bearing fruits year after year. This is essentially what investing is all about. It's about harnessing the power of compound interest, a force so potent that Albert Einstein once called it the eighth wonder of the world. It's about taking calculated risks, understanding that with potential rewards also come potential pitfalls. But most importantly, it's about making informed decisions. Investing isn't a get-rich-quick scheme. It's a process, a journey that, with patience and discipline, can lead to financial freedom and long-term wealth creation. So, are you ready to explore the world of investing? Let's dive into the basics first. Investing might seem complex, but at its core, it's quite simple. Imagine planting a seed and nurturing it over time. As it grows, it bears fruit. This is the fundamental idea behind investing. You're planting your money in an investment vehicle, nurturing it with patience and smart decisions. And over time, it grows and provides you with a return, the fruit of your labor, if you will. Now, let's break this down a bit more. There are various places or investment vehicles where you can plant your money. Stocks, bonds, and mutual funds are among the most common ones. When you buy a stock, you are buying a small piece of ownership in a company. If the company does well, the price of the stock goes up, and you make a profit. But if the company doesn't do well, the price of the stock may go down, and you could lose money. Bonds, on the other hand, are like loans. When you buy a bond, you're essentially lending your money to a company or government. In return, they agree to give you back your money at a certain date in the future, with interest. Then there are mutual funds. These are a basket of different stocks and bonds. When you buy into a mutual fund, you're buying a piece of this basket, which gives you instant diversification. Diversification is a key principle of investing. It's like the saying, don't put all your eggs in one basket. By spreading your investments across different types of assets, you can reduce the risk of losing money. So investing is about owning a piece of a company or lending money to a company or government and earning a return on your investment. It's about patience, smart decisions, and diversification. Now that you have a grasp of the basics, it's time to delve into the different types of investments. When it comes to investing, the possibilities are endless, but they can be categorized into a few key types. Let's start with stocks. Stocks represent ownership in a company and constitute a claim on part of the company's assets and earnings. There are two main types of stock: common and preferred. The upside, they can provide the most significant potential return. But remember, with high reward comes high risk. Next up, we have bonds. Bonds are loans made to large organizations. These can include corporations, cities, and national governments. When you purchase a bond, you're effectively lending money in return for interest payments and the return of the loan amount when the bond matures. Bonds are generally considered safer than stocks, but the returns are often lower. Then we have mutual funds. A mutual fund pools money from many investors to invest in a diversified portfolio of stocks, bonds, or other assets. Mutual funds are managed by professional money managers. They offer diversification and professional management, but they also come with fees, and not all perform well. Finally, let's touch on real estate. Real estate investing involves purchasing properties for rental income, future resale, or both. It can provide cash flow and potential appreciation over time. However, it also comes with certain risks, like market fluctuations and property management issues. Each type of investment comes with its own set of potential benefits and risks. Stocks can offer high returns, but come with significant risk. Bonds provide steady income, but with lower returns. Mutual funds offer diversification, but their success depends on the skill of the manager. And real estate can provide both income and appreciation, but comes with its own unique challenges. These are just a few of the many types of investments out there. There are also options like commodities, ETFs, index funds, options, and more. These all come with their own sets of benefits and risks, and they all require different levels of knowledge and involvement. Understanding the different types of investments is just the first step. Now, let's talk about strategies. Investing is not just about choosing the right investments, but also about managing risk and planning for the long term. A crucial part of this is the strategy you adopt. A popular strategy is buy and hold, which involves purchasing investments and holding onto them for a long period of time, regardless of market fluctuations. This method banks on the historical tendency of financial markets to rise over time, and it also reduces the impact of short-term volatility. Another strategy is dollar-cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of the price of the investment. Over time, this strategy can lower the average cost per share of the investment, reducing the risk of investing a large amount in a single investment at the wrong time. But let's not forget about diversification. This strategy involves spreading your investments across various assets to reduce risk. If one investment performs poorly, others may perform well and offset the loss. It's like the old saying, don't put all your eggs in one basket. Now let's talk about risk management. It's all about balancing potential rewards against potential losses. A balanced portfolio of investments can help manage risk. This means having a mix of different types of investments, stocks, bonds, real estate, and so on. The right balance depends on your financial goals, your time horizon, and your tolerance for risk. Investing is a journey, and like any journey, it requires planning, patience, and a bit of courage. So there you have it, Investing Demystified. We've taken you through the essentials, from understanding the basics of investing to exploring various investment routes. We've also delved into strategies and risk management, equipping you with the tools to make informed decisions. But here's the kicker. Investing isn't a sprint, it's a marathon. It's not about instant wealth, but sustainable growth. Remember, investing is a long-term game. It's not about getting rich quick, but about building wealth over time. Start investing today and let your money work for you.